Are you struggling with tax debt? It's a common problem that many individuals and businesses face, and it can be overwhelming. There are many reasons why someone might find themselves owing taxes to the IRS. But the good news is that there are ways to repay your tax debt and get back on track with the IRS. In this video, we'll discuss some of the most common reasons for tax debt and explore some of the options available for repaying your tax debt. As a taxpayer, it's important to stay current with your tax payments. However, sometimes you may find yourself owing more to the IRS than you anticipated, leading to tax debt. There may be a variety of reasons, and few would be like underpayment of taxes. If you did not withhold enough taxes from your paycheck or failed to make estimated tax payments throughout the year. If you are self-employed, you are responsible for paying both the employee and employer portions of payroll taxes. If you received income from sources that were not reported to the IRS, such as freelance work or tips. Deductions or credit disallowances can affect your ability to repay your tax debt. If a tax law change affects the tax year in which you owe taxes, it may impact the amount of tax you owe or your ability to claim certain deductions or credits. If you find yourself in this situation, there are several options available to pay off your tax debt with the IRS. Let's get into the video and discuss them. Full payment. The simplest way to pay off your tax debt is to pay it in full. If you have the means to do so, this is the best option. This would avoid the penalty charges in some cases as well. You can make a payment online, by mail, or through a tax professional in case if you used them. Installment agreement. If you cannot afford to pay your tax debt in full, you can apply for an installment agreement. This allows you to pay your tax debt over time, in monthly payments. We will go little in detail on this as this is not a best option and involves certain disadvantages in long run, so we will take it one by one. You can apply for an installment agreement online or by mail. There are different types of installment agreements available depending on the amount of your tax debt and how long you need to pay it off. While an installment agreement can be a helpful way to pay off your tax debt over time, there are some issues that can arise. Here are a few common issues with installment agreements and how to address them. Missed payments. If you miss a payment on your installment agreement, the IRS can take action to collect the remaining balance, such as filing a federal tax lien or levying your bank account or wages. If you miss a payment, it's important to contact the IRS as soon as possible to discuss your options. High interest and fees. While an installment agreement can allow you to pay off your tax debt over time, you will still owe interest and penalties on the remaining balance. These fees can add up quickly and make it harder to pay off your debt. To minimize these fees, try to pay off your debt as quickly as possible. Changes in financial situation. If your financial situation changes, such as if you lose your job or have a medical emergency, you may no longer be able to afford your installment payments. If this happens, contact the IRS as soon as possible to discuss your options, which may include a temporary delay or a modification to your installment agreement. Defaulted agreements. If you default on your installment agreement, the IRS can take collection action against you, such as filing a tax lien or garnishing your wages. To avoid defaulting, be sure to make your payments on time and in full. Length of agreement. Depending on the amount of your tax debt, you may be required to make payments on your installment agreement for several years. This can be a long time to make payments, and you may be eager to pay off your debt sooner. Now, to pay off your debt faster, consider making extra. Coming back to the other type of payment option, offer in compromise. An offer in compromise is an agreement between you and the IRS to settle your tax debt for less than the full amount owed. This option is available if you cannot pay your tax debt in full or through an installment agreement. However, not everyone qualifies for this option, and it can be a complex process to apply. Temporary delay. If you are experiencing financial hardship and cannot afford to make any payments, you may be able to request a temporary delay of your tax debt. This does not reduce your tax debt, but it does give you time to get back on your feet financially. You can request a temporary delay online or by phone. Partial payment installment agreement. This option allows you to pay off your tax debt over time, but at a reduced amount. The IRS will review your financial situation and determine what you can afford to pay each month. This option is similar to an installment agreement, but you end up paying less overall. Now, going forward the next time, is there a way to avoid tax debt next time? Review the IRS tax withholding estimator. This tool can help you calculate the right amount of tax withholding based on your specific circumstances, such as income, deductions, and credits. Adjust your W-4 forms. All individuals should review their W-4 forms and make adjustments based on their income, deductions, and credits. This can help reduce the amount of tax withholding and increase your take-home pay. Consider claiming allowances. Each individual can claim allowances on their W-4 form based on their specific circumstances. This can help reduce the amount of tax withholding and increase your take-home pay. In conclusion, if you find yourself owing tax debt to the IRS, it's important to know that you have options. Whether you can pay your debt in full or need to make monthly payments, the IRS has options available to help you resolve your tax debt. Be sure to explore all of your options and choose the one that best fits your financial situation.